Hello, and welcome to another episode of Tales from the Trenches. This is Justin Paolini here at Building a Trader. Today, we're going to talk about the only technical analysis you will ever need. But first, let me go through the risk warning. Trading foreign exchange carries a high level of risk and may not be suitable for all investors. The high degree of leverage available can magnify profits as well as losses. You can lose more than your initial deposit, so before trading, please carefully consider the risks and the inherent costs and seek independent advice as required. And please contact us to discuss any questions or concerns you may have because we are here to help. So, the only technical analysis you will ever need. There have been more than 10,000 books written on technical analysis, but most traders still keep losing. This is an example here of what I typically see traders do, and it's been going on for decades because retail positioning data has been available since the early 2000s, and the same behavioral traits have never changed. As you can see in this chart on Auto Canada, as the market is in an uptrend, traders in aggregate continue to add to short positions. And instead, when the market switches to a downtrend, then trader positioning switches to a positive bias. So essentially, in aggregate, traders are fading rallies, they're fighting trends, and they're buying into these dips. Okay? Obviously, they're always fighting the flow for whatever reason. So despite all the books on technical analysis, despite all the knowledge that's out there, traders don't really seem to get much benefit. And there are some reasons for this, but the bottom line is that that kind of knowledge, spending countless hours becoming an expert on technical analysis, doesn't seem to be worthwhile. So let me tell you what the difference is between the industry traders that I've been in touch with and that I work with, and most retail traders that I've been in touch with over the years. As you know, I've been on the retail side as an educator and as a coach ever since 2013. So I have a few years of experience with retail traders. I myself have a bit of industry experience. I started working in 2008. So I've been in the markets a while, and although it's a never-ending learning curve, I probably have enough experience to give you, some fairly valuable conclusions up to now. So here's the deal. Industry traders all agree that managing risk is the main duty of a trader. Okay, now instead, retail traders usually think that being right or making money is the main duty, but that's not the fact. The fact is that traders have to be master risk managers first. Okay, there are as many ways to trade as there are traders, but everybody basically sings to the same tune when it comes to managing risk. Keep your losses small compared to your profits. Make sure you don't bet the house on any single trade, and make sure that your maximum drawdown can never stop you and never put your account in danger. Okay, and a metric that is always confirmed in the institutional space is that drawdowns of 3% are essentially what will keep you afloat and what will attract clients and attract funding partners to you. Second thing, industry traders use technical tools to help manage their positions. Okay, notice the word manage. Not get into position, but manage their positions. Okay, essentially, technical analysis is almost best used as a risk assessment tool, as a trade management tool, but not really a tool to get into trades. Okay, now compare that with what retail traders usually think, which is that technical tools are supposed to help us find setups or get into trades or find excuses to get in the market. Okay, so that's wrong. Third, industry traders have an in-depth knowledge of fundamental data and how it impacts market sentiment. Okay, we'll talk a lot more about this in the future videos, but just know this: when you see traders at their desks, the traders usually don't have 6 screens full of charts. They will have a lot of news, they will have a few charts, they will have intermarket analysis, but it's not pouring through loads of charts that helps them identify and execute profitable trades. Okay? A lot of the background preparation is in the fundamental area. And instead, retail traders often believe that price discounts everything. So obviously that's wrong. Number 4, industry traders exploit market dynamics that are not technical in nature, but are instead a reflection of other participants' behavior. Okay, now we will talk about some of these market dynamics in this presentation, but just realize that the reasons for getting into trades, or the reasons for targeting the euro instead of the pound on any given day, or the reasons for not trading on a certain day, usually come from knowledge of something that's not technical in nature. Okay? Retail traders usually ignore all of this, and so they don't really know how to properly exploit these dynamics, let alone know that they exist. To give you a shortcut, all the technical information you need to put yourself ahead of most people out there is inside the FCI Markets free Trader Foundations course. Now, I designed this last year in 2020. It's free. It's distributed in 13 lessons. You can go and get it at fci-markets.co.uk/promotions/free course. And this goes through the basics of foreign exchange trading, and it goes through the basic technical tools and market structure, and trade setups and trade management that you will need to get yourself on the right path. Okay, it's a free course, but the lessons that are in there are presented in a way that will keep you on the right side of the flows, so not fighting trends, not fighting flows, but on the right side of flows. There is information on trade management in there that, frankly, I don't see very often on the internet or in other educational material, because apparently trade management is one of those areas where people don't really have much experience. They don't know what to do. So it's in there. And the other thing is that it's very simple. Okay, everything in there is to help you structure a very simple approach to the markets that is functional. So I encourage you, if you're struggling or if you're just starting out, to go and just pick this up. And if there are any issues with the delivery of the emails, just write me and I'll send it to you in person. Here's what you'll learn. Okay, what is trading? Adapting to the foreign exchange market. Setting up your trading platform like a pro. What are price charts and how do professional traders use them? Chart reading. Charts have limits. And then we get into a more practical part, a 30 trade challenge, essential trade management, avoiding unforced errors, competence before confidence, the master trader mindset, playing the odds, what are odds, and then mastering your emotions while trading. So it's a pretty comprehensive course, and I hope you'll pick it up. So now let's go and answer the question, how do professional traders get into position? Well, technically speaking, the only things you need to establish, and that free course will help you identify, are where's the trend, because if there's no trend, there's probably no trade. Okay, what price level represents a good value for entering a trade? Okay, we don't enter just anywhere. We don't chase the market. And what is my setup? Okay, what is the edge I'm exploiting? Following a trend is already an edge in itself, but trading is about timing, and so we have to practice our setups and get them down pat. However, technical tools alone don't usually fit the bill. That's not really what will really give you the edge that you're looking for, because if they did, if it was all about technical analysis, almost all aspiring traders would be successful. So here are the missing ingredients: sentiment, volatility, and order book dynamics. Okay, now we'll talk more about each of these in subsequent videos, but just briefly, Market sentiment tells you what's in focus at any given time, as well as what consensus is, okay, what the market currently believes or is currently looking at about any given currency, growth prospects for any economy, central bank changes, news items, etc., etc. Then intermarket movement, how traders are digesting market sentiment. So it connects the flows through the different asset classes. Volatility, no 2 days or no 2 weeks are alike. The market can be very, very active one week, and it can be very dull the other week. So paying attention to volatility dynamics is also very important. And then order book dynamics. A couple of dynamics that you probably heard of are, month-end flows or quarter-end flows. These are must-do flows because of asset manager rebalancing. There's the triple and quadruple witching days, which have to do with big option expiries. Then, and there are other dynamics that are must-do, and they can be exploited. There can be edges designed around this. There's another one, for example, is the 4 p.m. London time fixing. Then there is the demand-supply imbalance area, and this is possibly the best known order book dynamic in retail space. The fact is that most traders I've seen that exploit this get it wrong. They use it inappropriately. Another order book dynamic has to do with stop losses, where stop losses have been aggregating, and where the market may be pushing into a bunch of stop orders that offer liquidity. Connected to this are also, for example, option barriers. So dynamics like these, and there are more. I certainly don't know them all, but these are just a few that I do know and that I'm reporting. These are much more important than technical analysis in itself. These can help you design your entries. These can give you a heads up to where to actually look for your setups, or where to exploit your setups. Okay, they tend to be more important than just technical analysis. The bottom line, and I guess one of the main takeaways from this brief video, is don't crowd your charts and don't get all caught up in technical analysis. Okay, whatever you do, whatever your approach is, keep it very simple and remain consistent. More technical tools does not give you more of an edge. It doesn't enhance the probability of having a winning trade, so it's fairly useless. Okay, use technical tools only to help you describe dynamics that you can't really see with your own eyes, or that help you. Use them as a crutch of some sort. But don't go overboard on the technicals, and instead start looking at the fundamental aspect of things and start thinking about why there may be trading at certain levels, and whether there are any external influences that could dictate some kind of movement on any given day or week. These other pieces of the puzzle tend to be more important than technical analysis in itself. Okay, technical analysis is much more useful for managing your trades, for knowing what to do once you're in a position, rather than to get you in the position. So I hope this is useful. I also wanted to remind you that there are always opportunities awaiting once you become a consistent trader. One of these opportunities is becoming a funded trader through my partners at SCI Markets. It can be challenging to pass the verification phase, but once you pass the phase, you'll be presented to investors that are more than happy to offer you funds to be traded. So it's not a typical prop shop setup. It's an actual funding setup. So there is no recurring fee. There's no pay to be verified. It's much more based on merit. With that, I'll wish you good luck with your trading. This is Justin Paolini from Building a Trader. Over and out.